said that the capital budgeting process, first thing to do is to estimate the cash inflows, the cash outflows in relation with the project. Then we use these cash flows in second step to estimate, to compute different investment criteria to decide whether to accept or no a project in a third step. So the first step consists on estimating the project's cash flow. As we said, the estimation depends on whether the project is an expansion project or a replacement project. We start with the expansion project. We said that first thing to do is to compute the after-tax operating cash flows over the project's life, the investment outlays or the initial investment, if you want, any impact of this new investment on the working capital of the company. We will see what do we mean by working capital, how to measure it, and the terminal year after tax salvage value. We took a first case of the operating cash flow estimation. We said that in the capital budgeting decision, we don't use the accounting revenues, if you want, or accounting income of the company, like the net income of the company. Instead, we use cash flows and specifically the operating cash flow, the after-tax operating cash flow. To compute the after-tax operating cash flow, we need the after-tax operating income first, also called the unlevered net income. So simply we take the same process of computing the net income that you saw in accounting, but here we do not subtract the interest charges, because in the capital budgeting, the estimation of the cash flows, we separate the investment activity from the financing activities and all the interests that the financing activity may generate. So first of all, we compute the unlevered net income, as I said, also known as after-tax operating income. Then we add back the depreciation, since depreciation are non-cash charges. You get your operating cash flow, your annual operating cash flow, after-tax operating cash flow, we call it. So we did an example. First of all, we saw that we have two techniques of computing the depreciation. It depends on the information available. When we use the modified accelerated cost recovery system instead of the straight line technique, you notice that during the first years, the depreciation, the amount of the depreciation will be higher. So the use of the modified accelerated cost recovery system method of depreciation shifts, if you want, the cash flows from later years to earlier years. So the cash flows of the first years will be higher than the cash flows of the later years, compared to the cash flows computed using the straight line technique. And you have an exercise in the tutorial that compares the two techniques. Simply, you can notice that, for example, when we take a 3-year depreciation asset, you will take 33.33% each year when you use the straight line technique during 3 years. So during the 2 first years, for example, you will get 33% plus 33%, 66%. But when you use the modified accelerated cost recovery system, during the 2 first years, you will recover 77% of the cost of the equipment, 33 plus 44%. Now, since depreciation first are subtracted to compute the unlevered net income, the use of the modified accelerated cost recovery system will decrease the after-tax operating income for the first years, but since the depreciation are added back, this will increase the operating cash flow compared to during the first years, compared to the use of the straight line technique. You'll have an exercise, as I said, in the tutorial that compares the two. We took the first application in which we computed the operating cash flow. As I said before, computing the operating cash flow, you need the operating income, after tax operating income. Then you add back the depreciation of it. This is the basic way of computing the operating cash flow. Now, we know that at the end of the economic life of any project, sometimes prior to the end of the life of the project, some companies can sell the project or some of the equipments in relation with the project. In this case, we talk about disposal of equipment, and the price at which we sell these equipments is called the salvage value. When you sell the equipment at the end of its economic life or prior, according to the amount or the price at which you sold these assets, you can get a capital gain or a capital loss on this disposal of equipment. What do we mean by capital gain or capital loss? This will depend on the sell price. If the sell price is greater or less than the book value of the equipment. Suppose that the equipment, for example, is fully amortized, fully depreciated. So we did all the depreciation. So the book value, which is the initial cost minus the accumulated depreciation, will be zero during the last year, and we sell it. If we sell it at, for example, $100,000, for example, the 100 is called the salvage value, and these 100 represents for the company a capital gain on this sale. So when you realize the capital gain, of course, you have to pay taxes on this gain because the equipment is fully depreciated. You recovered all the costs, the initial cost. This is allowed by the government, as I explained during the previous session concerning the depreciation. Then any amount received by the company from the sale of the equipment higher than its book value at the moment of the sale, of the disposal, will represent a capital gain, and on this capital gain you have to pay taxes. So the net salvage value, the net amount that the company can receive, the net inflow in relation with the disposal of the equipment that the company will receive at any moment, the life of the project, when it proceeds to a disposal of the equipment, is simply the sale price minus the taxes on the gain on disposal. The gain on disposal is equal to sale price minus the book value, the difference, capital gain. Sometimes you can't sell the equipment at a price equal or higher than the book value because the equipment is now obsolete. We have a new technology that allows us to produce the same product at a lower cost, etc., and more rapidly. The sale price is lower than the book value. In this case, you have a capital loss. And as I explained before, since the cash flows are only the cash flows in relation with this particular project, when you realize a loss on this operation of disposal of equipment, you in this case you have a tax saving. It means that you will this will reduce the tax that you have to pay to the government at the end of the year, because the total tax is not only this tax, is tax computed on other gains, on other projects, on other operations made by the company. So if this particular operation will generate a capital loss, this will generate for you a tax saving, a reduction in the taxes that must be paid. At the end of the year, we simply make the sum of all the tax to be paid minus the tax to be saved to get the total tax to be paid to the government. Now, so let's if you want to see how to compute this net salvage value that we must add to the last year cash flow of the project. When we proceed to the disposal, any net salvage value must be added to the last cash flow, to the cash flow of the date of the disposal of a company. A company is now in the final year of a project. The equipment originally cost $100,000, of which 80% has been depreciated. So now the book value is only 20%, since 80% has been depreciated. 20% of the 100,000, the current book value is $20,000. The company can sell the used equipment today for $28,000. Book value 20, sell price 28. You have here a capital gain of $8,000. This capital gain will generate a tax payment for the company. The company is obliged to pay taxes on this capital gain, 40% tax rate, 40% times 8,000. The company must pay 3,200. So we can sell the equipment at 28,000, but the net amount to be received by the company is 28 minus the taxes minus 3,200. Net salvage value 24,800, or directly we can use the formula sell price minus book value times the tax rate. You have 24,800. Now, if we use, for example, here in this application 3, the modified accelerated cost recovery system, and when we sell the equipment prior to the end of its economic life. For example, you purchase an equipment for $100,000 and it costs $10,000 to have it delivered. So the total cost to be amortized is $110,000 delivered and installed. Based on past information, you believe that you can sell the equipment for $17,000 in 6 years. The company's marginal tax rate is 40%, and the equipment falls into the modified accelerated cost recovery system 7-year depreciation category. When we have a 7-year depreciation category, you have 8 years of depreciation with 8 coefficient for each year, a decreasing coefficient. But you will not, you will sell the equipment at the end of year 6. You will not wait until the year 7 or year 8. You will sell the equipment at the date 6. What is the depreciation expense each year? Then what is the net salvage value in year 6 when you sell the equipment at $17,000? You have the basis of the depreciation, which is the total cost of the equipment, the purchase price and the cost of installation, 110,000. You have the different coefficient for 8 years. You compute the depreciation by multiplying simply the basis by the depreciation rate. Here I stopped in year 6. We can finish the year 7 and year 8, but we will not use them because simply we will sell the equipment here at the date 6. Simply we need to determine the book value at the date 6. The book value of the date 6 is simply the sum of all the depreciation subtracted from the initial cost, or simply the sum of the 2 remaining depreciation. The book value is simply 14,718. When you sell the equipment at 17,000, you realize the capital gain of 2,282, on which you have to pay taxes. The net salvage value is simply the sell price minus the taxes, or sell price minus, between parentheses, sell price minus book value times the tax rate. You'll get the same.
Sir?
Yes.
I have a question. Monsieur قلت لنا اللي هي depreciation مش نعمل accumulated depreciation until year 6 or the sum of the depreciation of year 7
لا.
and year 8.
لا ما قلتش هذا. قلت the
أخذت.
sum of the depreciation from 1 to 6 subtracted from the initial cost.
Okay.
هذا نحيهم من 1010 double 1010 minus the accumulated depreciation or the remaining depreciation اللي ما عملتهمش حاجه من اثنين.
Okay, sir. Thank you.
Okay. But now when you decide to implement a new project or to replace an old project by a new one, an old equipment by a new one, in addition to the cost of the equipment, the new equipment you bought, the introduction of this new project in your company in general affects the current assets and the current liabilities of the company. Why? Because you have a new activity, an evolution of your activity. The evolution of your activity, of your operating activity, can affect the level of the inventory, the level of the receivables, and the level of payables, because you have a new product or an increase in your production, for example, capacity, etc. So you need, for sometimes, more inventories of raw products or finished products. The sales on credit, which are summarized in your receivables, or what you purchase from your suppliers on credit, which is the level of payables, can vary. So, and this variation is due to this particular new project you decide to implement in your company. So, the difference between the current assets and the current liabilities that we call in finance the net working capital, which is simply a need of money, an investment, another investment that you need to make to finance any new inventory, any new receivables, minus payables. So the variation of the inventories and the receivables, which are investments, money to be invested, you need to invest money to finance this variation, this increase in general. This increase in the inventories and receivable, in general, in part, is financed with an increase in the payables of the company. In general, I'm talking about general cases, increase on the payables because your supplier will sell you more on credit, but we assume that. So the difference now between the investment required, which is the inventory plus the new receivables, minus the payables, the difference between the two represents for the company an additional need of money to be able to finance your operating activity. Because without these new inventories, without these new receivables, financed in part with the payables, you can't operate the business. So you have to take into consideration in your cost, the cost of the equipment, we call it the initial outlay, the initial investment, at the moment when you decide to install a new equipment and to make a new project. The cost of the project is not only the cost of the equipment and the installation of these equipments. You have to take into consideration another investment that the company must make to finance its additional need of working capital. We call it in finance, we call it the net working capital, variation of net working capital, an investment in net working capital, or the working capital requirement. How to measure it? Simply, the investment in net working capital, working capital requirement, or variation in the net working capital is simply the new level of net working capital minus the old level of net working capital. If the net working capital, if it is a new project from zero, we didn't make a replacement here. Simply we compare the net working capital, the new net working capital with zero. This will be your increase in the net working capital. The increase in the net working capital must be added to the total investment flow of the year. Now, what you invest today to finance your operating activities linked to the net working capital, at the moment when you stop your activity, suppose you stop your activity at the end of the year, or 2 years from now, 3 years from now, or you wait until the end of the economic life of the project, any amount invested initially will be recovered in its totality at the date when you stop your activity. So if you invest, for example, 100 today, in addition to the cost of the equipment, because you have more inventories, more receivables, minus the payables, the 100 invested today, if you stop your activity 1 year from now, you will recollect them. Or these 100, if you stop, you wait until the end of the life of the project, for example, 5 years from now, at the date end of the year 5, the initial working capital invested at the date 0 will be recovered at the end of the year life, the project life. 5 years from now, you will get plus 100, minus 100 at the end of at the beginning of the first year at the date 0, plus 100 at the end of the economic life of the project. So the sum of the working capital requirement invested at the beginning of each year will be recovered and added to the terminal year cash flow. Let's take an example to understand this. Suppose a project requires the company to set aside an initial net working capital of $20,000. Initial net working capital means at the date 0 with the initial investment. Net working capital need is also $20,000 in each of the subsequent year during 6-year life. So in addition to $20,000 to be set aside at the beginning of the first year, each year during 6 years, you need to invest $20,000. Assume net working capital is fully recovered each year. Calculate the change in the net working capital. So in this example, any negative net working capital is to show that this company must invest this amount, and any positive net working capital means that this amount is recovered. So for example, the 20,000 invested at the date 0, which is the beginning of the next year, is simply recovered at the end of the first year. But at the same time, you need to reinvest 20,000. So at the date 1, you receive 20,000, you recover 20,000, but you reinvest 20,000. So the working capital variation will be 0. At the date 0, you invest 20,000, you receive nothing at the date 0. So your cash flow, working capital requirement will be 20,000 investment, minus to say that it's an investment. Date 2, at the same time, you recover the 20,000 invested at the date 1, but you have to invest 20,000. The variation will be 0. The same thing for year 3, year 4, year 5. During the year 6, you recover the 20,000 of the 5th year. You invest 20,000 for the 6th year, but at the same time, at the end of the year, you will recover the 20,000 invested during the year 6. So you'll have minus 20 plus 20 plus 20 plus 20,000. This is to say that if this project requires from you an initial net working capital of $20,000 to be invested at the beginning of the first year, it means at the date 0, the date of the investment. If you don't have any variation in your activity, annual increase in your working capital requirement, the 20,000 invested at the date 0 will be recovered during the term at the terminal year at the date 6, you invest 20,000. When you stop your activity at the end of year 6, you will recover these 20,000. So you have to take into consideration any variation in your net working capital generated by the use of this new equipment, of the introduction of this new project in your company. The investment outlay, or we call it also the initial outlay. This initial investment, when we have a new project, an expansion project, not a replacement project, but an expansion project, the initial outlay, as we say, is composed by the investment in any fixed capital, which is the cost of the equipment, purchase price and installation costs, etc., plus the variation in the net working capital, called net working capital investment in net working capital, or working capital requirement 0. For example, an investment project requires 25,000 for non-depreciable land, plus an equipment purchased at $165,000, and an additional 10,000 needed to install the equipment. So the cost of the equipment, the investment in net fixed capital, will be 25 plus 165 plus 10. You will have $200,000 for the fixed capital item. So investment in the fixed capital, 200,000. Now, the investment in net working capital is the net, which is the net investment in short-term assets required for the investment. This is the investment in receivables and inventory needed, less than the short-term payables generated by the project. In our case, the project required $50,000 of current assets, but generated 20,000 in current liabilities. It means that current assets, when you introduce this new project in our company, current assets will increase by 50,000, and current liabilities will increase by 20,000. So your need of money to finance your operating activity will increase by 50 minus 20 by 30,000. This is the net working capital the working capital requirement, or the net working capital investment. So the total investment flow of date 0, we call it the initial outlay, is equal to 200 plus the additional 30, 230,000. In the application 5, your company is considering a new investment whose data are shown below. The equipment that would be used has a 3-year tax life, would be depreciable on a straight line basis over the project 3-year life, and will have 0 salvage value. The project would require some new working capital that must be invested at the beginning of each year to support the operations of the year. The total working capital required invested would be recovered at the end of the project's life. Revenues and other operating costs are expected to be constant over the project 3-year life. Compute the annual cash flows from year 0 to year 3, means compute the initial outlay, the initial investment, then the total, the after-tax operating cash flow, any working capital requirement that will be invested at the date 0 and recovered at the date 3, in relation with this project. The cost of the equipment is 65,000. The working capital required represents 15% of the sales of the year. It means that to be able to realize the sales of year 1, you need to invest at the beginning of year 1 15% of the sales. This is the variation in your net working capital, the increase in the inventory receivables minus the payables represents approximately 15% of the sales that you expect to realize during the next year. you should use here the straight line depreciation rate of 33.33%. Sales revenues $70,000. Operating costs excluding depreciation $25,000 annually, and these will remain constant during the 3 years. The tax rate is 35%. So, first thing to do is to estimate the working capital requirement, if you want. To be able to estimate the working capital requirements, the investment in net working capital, you did the sales, the annual sales. The annual sales are $70,000. Now, to be able to realize these $70,000 during the first year, we need to invest at the beginning of the year 1, which is the date 0, 15%, an amount equivalent to 15% of the sales. 15% of the 70,000 is equal to 10,500. So from 0 to 10,500, this represents an investment, a new investment in net working capital of 10,500. So here we put the net working capital positive, simply to say that it is an investment. This is what we require, not with the negative sign. We will put the negative sign later to say that this is a cash outflow. Then when it is positive, we say that this is a cash inflow. But here, just understand these values as the required investment, required amount. So we invest 10,500 at the date 0 to support the sales of year 1. We invest the same amount, 15% of the 70,000 of the sales of year 2 at the beginning of year 2, it means at the date 1, to support the sales of year 2. At the beginning of year 3, we invest 15% of the sales to be able to realize the sales of year 3. So we have 10,500, 10,500, 10,500. These are the required amounts. But the 10,500 invested at the date 0 will be recovered at the date 1. We recover 10,500, we reinvest 10,500. So the variation is 10,500 at the date 0, but at the date 1 we have 0 new investment, because the amount recovered from the previous year will be reinvested during the year. The same thing for the date 2. We recover what we invested at the date 1, and we invest the same amount at the date 2. The new investment is 0. There is no variation. The date 3 now, we will recover the investment made at the beginning of year 3 at the end of year 3. So these 10,500 invested at the beginning of year 3 will be recovered here at the end of year 3. We put it here as plus working capital, which is to say that this is the recovery of the working capital, the last working capital invested at the beginning of the last year, which is simply the initial working capital. So to summarize the impact of this new project on the working capital requirement of this company, we invest initially 10,500 at the date 0. We recover it at the last at the last date with the last cash flow minus 10,500 invested at the date 0 plus 10,500 recovered at the date 3. The initial outlay now, the initial investment made at the date 0 is composed, as we said, by the cost of the equipment 65,000 and the variation in the net working capital 10,500. This sum is 70,500 negative, to say that it is a net cash flow. A negative cash flow means an outflow of money. To compute now the after-tax operating cash flow. after-tax operating cash flow. The after-tax operating cash flow is the after-tax operating income, which is the unlevered net income, sales minus costs, operating costs minus depreciation minus the taxes. You get the unlevered net income or the after-tax operating income. You add back the depreciation, you get the after-tax operating cash flow. This is the after-tax operating cash flow year 1, year 2. The after-tax operating cash flow of year 3, we add to it the recovery of the working capital requirement, 10,500. So you get the different cash flows in relation with this project, a negative cash flow at the date 0 and positive cash flows. They are identical each year, except the last date, the last year, the last cash flow will take into consideration the additional, well, the recovery of the net working capital invested at the beginning of the life of the project, 10,500. Is it clear, Yasmin? Do you have questions? Is it clear?
Yes.
Yes.
Now, let's take the case of a replacement project. When we replace an old project with a new project, here we are talking about variation of the operating cash flows. We call them incremental cash flows. The cash flows the company realizes with the investment, with this new investment, compared to the cash flows the company would realize without the investment, with the old project. For example, if we are investing in a new project with an outlay of $100,000 and we sell off existing assets, which is the old project, for $30,000, and we suppose that the $30,000 is the net salvage value of this equipment, old equipment if you want, their incremental outlay will be simply the difference, because we will receive 30,000, the net salvage value from the existing project, and we will pay 100. Simply the replacement will be the replacement cost will be $70,000. When we have a replacement project compared to the case of an expansion project, when we start from zero, the outlay the calculation of the outlay must take into consideration the net salvage value of the old fixed capital, because when we sell an old equipment to buy a new one, the sale of the old equipment will generate a cash flow for the company, and we call it the net salvage value. And we saw previously how to compute it: sale price minus book value times the tax rate. This net salvage value concerns the old equipment, not the new one. What we will recover from the sale of the old equipment today at the date of the replacement. And we could have another net salvage value at the end of the economic life of the new project that we add to the last year cash flow, as we explained before. A firm intends to replace a machine. Yes? You have questions? A firm intends to replace a machine purchased 3 years at $140,000, having a useful life of 7 years, by a new machine costing $100,000, depreciable on 4 years. So we bought an old machine 3 years later, earlier, 3 years before, at $140,000. Now, today we decide to sell this old machine and to replace it with a new machine that costs $100,000, depreciable on 4 years. The old machine can be sold at $90,000. We bought it at 140. We can sell it today, 3 years from its purchase date, at 90,000. The tax rate is 35%. First question, find the amount of the replacement investment, assuming that the tax on the gain on disposal is due at the date of the replacement. So we will simply apply this formula. The outlay, the initial outlay of the replacement, is equal to any investment in the fixed capital plus any increase or any variation in the net working capital minus the net salvage value of the old fixed capital. So what we will do is simply we need to determine the book value of the machine to be sold, which is the old machine. The depreciation of the old machine, annual depreciation, is 20,000. Depreciable on 7 years, 140, depreciable on 7 years. So if the annual depreciation is 20,000, 3 years after the purchase of the old machine, the book value of the old machine will be the initial cost, 140, minus 3 years of depreciation, 80,000, or simply the remaining depreciation, which represents 4 years of depreciation, 4 times 20. So the book value is 80, but we can sell it at 90. In this case, we have a gain on disposal of 10,000, on which we have to pay 35% taxes. So the net salvage value of the old machine is 90,000 minus 3,500, 87,500. We can compute it directly by using the formula sale price minus, between parentheses, sale price minus book value times the tax rate. You'll get the 87,500. So here the initial outlay, the investment that we need to make, we must make is 100. We will pay 100 to buy the new machine, but at the same time we will receive 87,500 from the sale of the old machine. The total investment is $12,500. This is when we sell the old machine at 90,000. The second question, let us suppose that you can sell the old machine at $70,000 only. Of course, the book value is still 80,000. But when we sell the old machine at a price lower than the book value, we will have a loss on disposal of $5,000. This loss on disposal must be taken into consideration in the calculation of the taxes, because this loss, the amount we lose from this disposal must be taken into consideration and must be subtracted from other gains that the company can make on other operations. So the tax impact on this loss on disposal is a tax saving. So we need to take into consideration 1,750, which is 35% on the loss, that must be reduced from the total tax that the company will pay at the end of the year, when it computes all the taxes that must be paid due to all the operations, all the projects made by the corporation. But linked to this particular operation of replacement, of sales of an old machine at a price lower than its book value, this will reduce the taxes that you must pay to the government at the end of the year by 1,750. So the net salvage value of the old machine must take into consideration this tax saving. When you use the formula, the tax to be paid is now negative. So minus, when you use the formula here, minus sell price minus book value minus a negative amount. So it would be plus. This is why the net salvage value here is 76,750, which is the sell price plus the tax saving. Here you will pay 100,000 to buy the new equipment, and you can save $76,750 from the sale of the old machine. The total investment is $23,250. Is it clear yet? You have simply to apply the formula كما هي. Sell price minus book value times the taxes. Regardless to which amount is higher, sell price or the book value, put the formula كما هي. What you'll find is the net salvage value linked to this particular operation of disposal of an old equipment or even a new equipment.
مسيو
Yes.
معناها انا كيف يبدا عندي لوس في الاكويبمنت اللي باش نبيعهم، الدوله تنقص لي في التاكسز اللي باش نخلصهم.
انت كي باش تجي تخلص تاكس نتاعك خاطر عندك كلاس بيان سور، انت ايش باش تعمل؟ خاطر انت الانكم ستيتمنت اللي باش تعمله في اخر العام اللي باش يعطيك توتال تاكسز تو بي باد، باش تلقى فيهم انك عندك كلاس، كانه عندك لاس في حاجه من الحاجات، وعندك جين في حاجه اخرى. بيان سور اللاس باش ينقص من الجين، باش تلقى في الاخر الايرنينجز بيفور تاكسز. في الايرنينجز بيفور تاكسز عندك خساره قبلها. بيان سور الايرنينجز بيفور تاكسز will be reduced. اما احنا ما قرينا اللي the cash flow that we need to estimate في الكابيتال بادجيتنج هو الكاش فلو linked to this particular project. هكا علاش we isolate this project من الحاجات الاخرين، ناخذوا كل الحاجات linked to this. بيان سور انا اي كاست، خاطر هذه بتسمى بالنسبه للكمباني كانه كاست. اللوس هي حاجه نقصت، عندك فاليو تاع اسيت نقصت، دونك هذه عندك عليها reduction in the taxes. مش معناها راهي الدوله باش تجي تعطيك 1750، لا مش تعطيك حتى شيء راه. اما سيمبلي عندك اوبريشن اخرى جابت لك فور اكزامبل ريفينيوز اللي هما نتاع ما نعرفش انا نتاع 10000، عندك 10000 جين في حاجه اخرى. ال 10000 هذي لازم تخلص عليها 3500 تاكسز. اما 3500 تاكسز اللي باش تخلصهم من غاديك عندك من هون حاجه نقصت خساره، عطاتك تاكس سيفينج ب 1750. دونك ماكش باش تخلص 3500، كانك باش تخلص 3500 من غاديكا وباش ينقص لك من هوني 1750. تلقى روحك لازمك تخلص كان 1750. هذا شنو معناه؟
يس ميرسي.
now قال لنا during the first year this replacement.
سامحني مسيو، سامحني.
Yes.
علاش we subtracted the 3500 from the 19,000 وفي الآخر زدناها؟ معناها هو in both cases he will be adding the taxes whether it's on a loss or on gain.
عودتي why we شنو؟
Why we subtracted 3,500 from the 90,000 في الآخر زدناها؟ معناها هو in both cases
خاطر هذاك جين، خاطر في الاوبريشن وقت اللي بعت ب 90,000 عملت جين، الجين لازم تعمل عليه بايمنت نتاع تاكسز. خاطر الدوله علاش تقول لك جين هوني؟ خاطر هي الكاست اوف ذا ايكويبمنت الدوله رجعته لك. انت الاماونت اللي شريته به هذيك ال 140,000 الدوله فما 3 تايمز 20,000 قالت لك هذوما ديبريشيشن، خذهم يا سيدي ما نحيهم، ما تخلصنيش عليهم تاكسز. بعد انت تلقاك انت من جهه ما خلصتش التاكسز، وبعد عملت جين على ظهرها الدوله، مشيت بعته بسوم اغلى من السوم اللي شنو هو مقيد عندك. كانك جاتك فور فري $10,000. تجي تقول لك اجا هون انت طلعت رابح 10,500 من الاوبريشن هذي من بلاش، من حتى شيء. جاتك 10000
باغ كونطخ كي تبيع بالخساره تولي الدوله تقول لك ما تخلصليش التاكس وهذاك علاش نزيدوه في السالفج فاليو.
الخساره هذه كما اي حاجه نقصد، كما اي كوست عندك، نحيه قبل ما تخلصني التاكسز. فهمت ولا؟ دونك هاك الكوست، هاك ال 5000 هذيك اللي هو الكوست اللي هي لوس، نحيه كانه شارج وبعد خلصني التاكس. كي تجي تحسب فيها تلقى ال 5000 اللي نحيتها قبل ما تخلص التاكس كانك فما عندك 1750 ريدكشن من التاكسز، التوتال تاكسز اللي باش تخلصهم اخر العام. حطيناهم هوني وحدهم، خاطر انا يهمني كان في البروجكت هذاش باش يجيب لي تاكس ولا باش ينقص لي تاكس. فهمتني ولا؟
باهي اوكي ميرسي. يس ثانك يو. فهمتك.
نمشي
ميرسي بوكو مسيو.
الفيرست شير، قرأنا في الفيرست شير. During the first year, this replacement will generate an additional revenue of $80,000 and additional operating expense of $2,000, excluding depreciation expense. Calculate or find the variation of the cash flows for the first year. So, when we replace the old equipment by a new one, revenues will increase by 8,000 annually. Operating expenses will be reduced by will increase also by $2,000 annually. To compute the operating cash flow, we need revenues, variation of the revenues. Here we're dealing with variation because we have a replacement project. Variation of revenues 8,000 minus variation of operating expenses 2,000. The depreciation now, we have to compare the new depreciation with the old depreciation. The new depreciation due to the use of the new equipment instead of the old equipment. Originally, the depreciation were 20,000, now the depreciation 25. So we have an increase in the depreciation by 5,000. The variation of your operating income 1,000 minus the taxes, you will get a variation in your unlevered net income. We call it also variation in the after-tax operating income. To pass from the after-tax operating income to an after-tax operating cash flow, we add back the depreciation. We add back the 5,000, you will get variation in your operating cash flow, after-tax operating cash flow of year one, 5,650. This is the variation in the operating cash flow due to this replacement, of course, for the first year. Is it clear?
Yes, sir.
Let's take a case now when the working capital requirement will vary each year. You will not invest only at the date zero. You will invest a net working capital at the date zero, but each year the amount to be reinvested is higher than the amount recovered, is higher than the amount required at the previous year. An investment in a production machine costing $100,000 and depreciable on 4 years is made in order to increase the production capacity of the firm. When you have an increase in the production capacity, in general, you will have a variation in the accounts, in the current assets and current liabilities of the company. So a variation in the difference between the two, which is called here the net working capital requirement or investment in net working capital. We expect a rise in the sales volume of 6,000 items during the first year, and an annual increase of 5% in the subsequent years. It means that the sales volume will increase by 6,000 items compared to the old situation during the first year, and this increase, also these 6,000 items will increase by 5% annually during the 4 of the 3 last years. The unit sale price is $36. This will allow us to compute the sales revenues, while the unit's variable costs is $16 to be able to compute the operating costs, the variable costs. The total fixed costs, excluding the depreciation, is $20,000. Now, the annual net working capital, the requirement, net working capital to be able to finance the operating activity of the year, of the next year, is estimated to be 30 days of the sales of next year. So if we know the sales of 360 days, the next year, our initial investment to support this operating activity, we call it the net working capital requirement, is equal to approximately 30 days of the sales, and must be invested at the beginning of each year to support the operations of the year. Tax rate is 40%. The net proceeds, it means after tax, of net salvage value of the old machine at the end of the 4th year is $2,000. It means after taking into consideration the tax capital gain on the disposal of this equipment at the end of year 4, the net amount to be received is $2,000. Find the annual investment flows, means the initial outlay and the annual outflows. Then compute the net cash flow, it means the inflows minus outflows. بالله يا جماعة to just parenthesis لازمنا نفهمكم هون يراو operating cash flow, net cash flow only. Now it depends, meaning that we want to communicate to the student. Now, for us today in this particular exercise, net cash flow, we mean by it inflows minus outflows. But the word net cash flow in other courses or in some textbooks can mean other things. Donc راو كلمة net cash flow مش always هي inflows minus outflows. راو net cash flow for this exercise is احنا to say the net cash flow, what is the net amount of operating cash flow linked to this particular year, because at the same year we will see in the exercise that we will have a cash flow to be paid and a cash flow to be received. What is the net between the two? كان يسميناه net cash flow. Okay? Now, first thing to do is to compute the working capital requirement. Yes.
الجملة اللي باللحمة ما فهمتهاش بداية أنه net working represent 30 days of the turnover of the year.
هذا تولي باش نفهموا توا باش نفهم لكم توا.
باهي اوكي. باهي عاش.
The first thing to do is to compute, as I said, the working capital requirement. As I said, the working capital requirement is an additional investment that the company must make, is a need of money, an additional need of money due to the variation of the operating activity of the company. خاطر زدت project جديد في الكمباني نتاعي. This project can affect the levels of inventory, receivables and payables. The difference between the two, from one side, inventory plus receivables, and minus payables, this difference between the two may vary each year due to this new project. This variation represents for the company a need of money, because when you have current assets higher than the current liabilities, you have to finance the difference between the two. How to finance this? We have to take it into consideration in the project in term. This is an additional cost if you want, an additional investment. هذا اللي فهمته بكري. Now how to compute it? هل net working capital. عندك 3 methods mainly that we use to compute it. According to the information available in the problem. عشان يعطيك يقول لك the work, the receivables, payables and inventory. كل واحدة تعطيك النيو فاليو نتاعها وانت تحسب receivables plus inventory minus payables تلقى the net working capital نتاعها. Or like in the previous exercise, the net working capital represents 10% of the turnover. تاخذ التورنوفر السيلز تعمل 10%. هون قال لك راهم 30 days من التورنوفر. ايش معناها 30 days من التورنوفر؟ هما التورنوفر تاع 360 days. انت راهو تاخذ 30 days هكا هو معناها التورنوفر تاع عام. انت باش تاخذ تاع شهر. هذاك هو approximately your required working capital at the beginning of each year. The amount that you need to invest to be able to operate the business during the next year هما the sales نتاع الشهر approximately يتكلفوا لك كانه السيلز نتاع الشهر approximately. هذه information عطاها لنا هو. It's not a rule هذا. باهي قال لنا هون the sales during the first year will increase by 6,000 items due to this new project. Each item can be sold at $36. It means that the sales will have the variation of the sales of the first year هما 216,000 and these sales will increase annually by 5%. This will allow us to compute sales 2, sales 3, sales 4, of course, كل واحدة times 1 plus 5%. Now, we have the sales for the first year, second, third, and fourth year. How to compute the net working capital requirement? To compute the net working capital requirement, we need to compute the net working capital. تقولوا requirement معناتها variation, difference between الجديد والقديم. Now, what is the net working capital? What is the amount that you need to invest at the beginning of each year to be able to finance the sales of the year? هما 30 days of the sales of the year. طب باش نجي هوني نحسب net working capital 0, net working capital 1, net working capital 2, net working capital 3. اللي هو the amount to be invested at the date 0 اللي هو 30 days of the sales of year 1. قال لي sales year 1 هما 216,000. نضربهم في 30 نقسم على 360. نقسم على 12 معناتها. divide by 12. نلقاو 18,000 is the working capital requirement 0. These amounts invested at the date 0.
Sure.
Yes.
هنا يقصد معناها قداش حاجته باش ينفستي كابيتال باش ينجم he covers السيلز نتاع الير 1 اما المحل نتاع 30 التيرن اوفر ما فهمتوش معناها ما فهمتش يقصد بيه.
كلمة تيرن اوفر هي السيلز معناتها هو شيفر دافير. تيرن اوفر هو شيفر دافير. الشيفر دافير نتاع عام كامل هو ما هو نتاع قداش من نهار، العام قداش فيه من نهار؟ 360 يوم.
يس.
اي اعطيني في 30 يوم قداش التطور تاع عام هما 216 في 30 يوم قداش كيفاش نحسبوه؟ نقسموا على 360 باش نلقاو التيرن اوفر تاع نهار ونضربوا في 30 باش نلقاو التيرن اوفر تاع 30 يوم. هذا اش عملنا راه. فهمتني ولا؟
باهي اوكي. معناها حبينا نعرفوا في العام قداش من مرة يبيع سيلز هكا.
مش قداش من مرة يبيع، مش قداش من مرة. هذاك التيرن اوفر ريشيو هذيك حاجة أخرى. هذيك قاعد نحب نحكي كان السيلز نتاعك في عام هما 216,000. في شهر قداش السيلز نتاعك؟
باهي اوكي.
إذا كان أنت في 10 أيام نعطيك 100 دينار. كل نهار كأني شنو أعطيك قداش أعطيتك؟ كان أعطيتك 10,000 100 دينار قسم على 10. هذا هو اش عملنا على.
باهي اوكي.
باهي.
اوكي.
So we invest at the date 0 $18,000 to support the activity. To support the activity مش كان السيلز كل شيء. To support the operating activity of year 1, we need to invest approximately $18,000 at the beginning of year 1 معناتها في date 0. But to be able to support the sales of year 2, the activity of year 2, لازم 30 days من السيلز of year 2 نسبقهم ننفستيهم نحطهم في الكامباني نتاع investment. 30 days of sales 2 هما 18,900 sales 2 نقسموه على 360 نضربوه في 30. طيب شنو نلقى روحي عملت؟ At the beginning of year 1 I invested 18,000. At the beginning of year 2 now, to be able to finance the sales of the operation of year 2, I need to invest 18,900. أنا déjà I invested 18 at the beginning of year 1 for date 0 that will be recovered at the beginning of year 2. So 18 invested at the date 0, recovered at the date 1, but at the same time I need to reinvest 18,900. كأنه شو معناها؟ كأني I invest an additional 900 واللي هي الديفرنس between net working capital 1 net working capital 0. 18,900 minus 18 an additional 900. كأني حطيت 18,000 at the date 0, recovered at the date 1, زدت عليهم 900 وعملت investment كامل تاع 18,900. عملت 18,900 invested at the date 1, recovered at the date 2, but at the date 2 I need to invest 19,845 because sales 3 will increase. Done. We recover 18,900, but we need to reinvest 19,845. So we need an additional investment in net working capital اللي هو 945 at the date 2. At the date 2, end of year 2, the total amount that we will receive, that we will recover هو 19,845. But at the same time, we need to reinvest 20,837.25 to finance the sales of the last year, year 4. We recover at the end of year 3 the 19,845. We reinvest 20,837.25. And we need an additional investment linked to the working capital requirement of 992.25. The totality invested اللي هما 20,837.25 at the end of year 3, at the beginning of year 4, will be recovered at the end of year 4. نلقاهم لهنا 20,837.25. كأني شنو عملت؟ لأن at the date 0 we invest 18,000. نحكي كان على الوركينج كابيتال مانيش نحكي على الكوست اوف ذا ماشين ما زلت. Working capital requirement 18,000 at the date 0. An additional 900 for date 1. An additional 245 at the date 2. An additional 292.25 at the date 3. كلهم هذوما الانفستمنت هذوما كلهم will be recovered مرة واحدة وقت اللي نوقف حساباتي الكل في الديت 4. So آخر حاجة انفستيتها قداش؟ هي ال 18 هذوما مع ال 900 مع ال 945 مع 992.25 اللي هما 20,837.25 will be recovered وقت اللي نوقفوا حساباتنا الكل في الاند اوف يور 4. هذه هي الوركينج كابيتال ريكويرمنت واللوجيك نتاعو. When we have variation in the net working capital, annual variation. شنو مثلا نعمل في previous examples. We invest 18,000 اما ما عنديش فاريشن، هوني ما عنديش، كلهم زيرو. اللي ننفستيه يرجع لي، نعاود ننفستيه يرجع لي، نعاود اي رينفستد، اي ريكفرد، اي رينفستد، اي ريكفرد. بدك تلقى كاش فلو في الزيرو، عندك working capital requirement زيرو، وعندك ريكفري في الديت 4 مره واحده. هوني لا، because we have an evolution in the activity, annual increase in the sales in the variable costs. عندك بانه working capital requirement is linked to these sales. نلقى اللي عندي extra investments to support our operating activity at the beginning of each year annually حتى الاخر year. هذه زي compared to the previous examples. عندك working capital requirement at the beginning of each year اللي هو higher than the recovery of the investment made at the beginning of the previous year. As simple as that. Now, what are the investment flows? Initially, you will pay $100,000 to buy the equipment, but you have an investment in the working capital of $18,000. So you invest at the date zero, $118,000. A negative cash flow of 118 here. Now, at the date 1, you have a cash outflow of 900. At the date 2, 945. At the date 3, 992.25. These are the investment flows. Let's move to the operating cash flow now. To compute the operating cash flow, we call it after-tax operating cash flow. We need the operating net income, net after-tax operating net income, اللي هو revenue minus variable costs minus fixed costs minus depreciation minus the taxes. We compute the unlevered net income. We call it also after-tax operating income. Then we add back the depreciation. You get the after-tax operating cash flow for each year. To this after-tax operating cash flow, for the last year, the last operating cash flow, we need to take into consideration two things. First thing, the net salvage value of the equipment sold at the end of the year 4. We have $2,000. And the recovery of all the net working capital invested at the beginning of each year. اللي هما 20,837.25. Together, هذم net salvage value and recovery of the working capital in finance, we call them the after-tax non-operating cash flow. So عندك an after-tax operating cash flow ونزيدهم after-tax non-operating cash flow. خاطر هذايا ماهوش linked للoperating activity. هذايا sales عملتهم بتاع equipment، جاك حاجة زايدة وفلوس انفستيتها من الأول ورجعت لك في الآخر كيما هي. ماهيش operating activity، كان يسميهم after-tax non-operating cash flow. جست اسم هذايا في الفاينانس يسميوها. دونك كأنه عندك أنت the total cash flow تاعك الأخراني باش يكون فيه after-tax operating cash flow ويزيدوا after-tax non-operating cash flow. هذا يتزاد كان في العام الأخراني بالكل. خاطر باش يصيروا حاجتين زايدين اللي هما recovery of the working capital requirement and any net salvage value linked to the sale or to the disposal of the equipment. شو نلقى عندي؟ نلقى عندي total cash inflows now. inflows وحدهم هما 70,000 year 1, 73,600 year 2, 77,380 year 3, 104,186.25 year 4. باهي تويك آخر step عنا. Each year we have, for example, year 1, 70,000 inflow but at the same time في اليور 1 عندي 900 to be invested. donc inflow 70 outflow 900 يعطيك net cash flow of 69,100. 70 باش يدخلوا 70,000 باش يدخلوا و900 باش يخرجوا يعطيوك net 69,100. The same thing for your two. inflow 73,600 outflow 945. النت هو 72,655 positive. It means it's an inflow. The same thing for your 3 and your 4. And these are the net cash flows in relation with the project. This is how to estimate the cash flow of the project اللي هما initial outlay اللي هو capital investment and investment in the net working capital, and sometimes the net salvage value of an old equipment sold to be able to replace it with the new equipment, and the total the after tax operating cash flow linked to the project اللي هو after tax net income plus depreciation of the year. To this after tax operating cash flow we add the total after tax non-operating cash flow, we call it, اللي هو net salvage value recovery of any working capital requirement invested at the beginning of each year during the life of the project. You get the net cash flow. Yes.
I have a question. Could you please re-explain the non-operating cash flow?
شو اسالك انا فهمتش معناها net salvage value ولا؟
أي net salvage value معناها أي
recovery of the working capital requirement ولا؟
لا ما فهمتهاش هذيك.
هذا هو اللي قاعد نعاود فيه من بكري. قلت لك اي حاجه تنفستيها to support your activity at the beginning of the year will be recovered at the end of the year. كل حاجه تنفستيها ترجع لك في اخر. تلقى روحك انت انفستيت هوني كيما نرجع للاكزامبل اللي قبله. هذا هو بيدو اللي فهمته لهنا. انفستيت هوني 10,500 وزيرو زيرو زيرو في العوام اللي بعدها. ال 10,500 اللي حطيتها في الزيرو رجعت لك في العام الاخرين. هذا فهمتها بكري ولا لا؟ لهنا
اي فهمتها.
الكيس هذا جديد. في العوام ال1 وال2 وال3 عندك هذا انفستمنت، في الاخرين عندك زيرو خاطر ما زادتش الاكتيفيتي نتاعك من العام العام. الريفينيوز ار كونستانت الاخرين، ما عندكش حاجات زايده باش تنفستيها في العام الاول والثاني والثالث والرابع. لا، حاجه واحده باش تنفستيها في الزيرو ترجع لك مره واحده. في الكيس هذايا لا، عندك 18,000 في الديت زيرو، 900 في الديت 1، 945 في الديت 2، 992.25 في الديت 3. The sum نتاعهم الكل هي 20,837. وين باش يمشيو؟ اسكو باش يضيعوا؟ مش باش يضيعوا، هي فلوس حطيتها شريك بها انفنتوري وعطيت بها كريديات للكاستمرز نتاعك. كي توقف حسابات الكل باش ترجع لك تلقاها موجوده عندك الفلوس هذيك. هذيك اسمها مش معناها ريكفري، هي فلوس انفستيتها باش ترجع كيما هي. فوندو كانوا فلوس حطيتها باش تديماري الاكتيفيتي نتاعك. لازمك تشري سلعه قبل، وساعات تنجم تبيع اليوم كل الكاستمر نتاعك مش خالصك كان بعد شهر ونص. منين كيفاش تصبر عليه الكاستمر هذاك؟ كيفاش باش تشري فلوس باش تشري سلعه باش تنجم تصنع؟ هذاك يسميوه the working capital requirement. بارتي منه فاينانسد من الكريديات من عند السبلاير نتاعك، من عند الفورنيسور نتاعك، خاطر هو بيدو باش يقول لك خذ سلعه اخدم بها خلصني كان بعد شهرين. باش تلقى روحك من جهه عندك نيد اللي هو 10 ملايين، ومن جهه اخرى الفورنيسور نتاعك صبر عليك في 3 ملايين، فما 7 ملايين اخرين ناقصين لازمك انت تحطهم. هذاك يسميوه ذا working capital requirement. 7 ملايين حطيتهم اليوم، كي نوقف حساباتي انا بعد شهرين نقول هاي بطلت الخدمه تاعي، هاي باش نوقف حساباتي باش نعمل ريكفري تاع الفلوس اللي نسالهم للكاستمرز نتاعك. نقول لا يجي خلصني خويا في الفلوس اللي نسالها لك. السلعه اللي عندي في الدب والكل باش نليك يديها، ونمشي للفورنيسور نقول له هاي فليسات تسلم، نلقاك ال7 ملايين اللي حطيتهم نلقاهم هو بيدهم رجعوا لي. هذاك اش معناها working capital requirement recovery of the working capital.
هيك علاش زدناها للنت سالفج فاليو؟ خاطر هكا ولا هكا انا انفستيتها من بعد رجعت لي معناها.
بيان سور باش ترجع لك. هذا يا رب بكري ما سميتيش حد شيء، مي هوني في الفاينانس الصام نتاعهم هذو الزوز يسميوها total after tax non operating cash. هذا اسم في الفاينانس كيما سميت هذايا سيلز، هذايا في الفاينانس يسميوها after tax non operating cash اللي هي السام نتاع net salvage value مع recovery of the working capital required. اي حاجه باش تتزاد للاوبريتنج كاش فلو اللي خاطر الاوبريتنج اكتيفيتي اللي هما خاطر هما حاجات زايدين. هذه حاجه انفستمنت عملته رجع لك فلوس حطيتها كما هي رجعت كما هي، وفلوس اخرى جاتك خاطر باعت الكوابت نتاعك. مع بعضهم في الفاينانس يسميوهم هكا، كانوا ينجموا يسميوهم حاجه اخرى، ها سماوهم هكا جوز باش نشدوا الاسم نتاعهم معهم. اما نفهموهم هما شنوما، هذا اللي يهمني انا، اللي يهمني نفهمهم هما شنو، وجسبركم مفهومين هما شنو. قل لي مدموزيل مفهوم ولا؟
اي مفهوم مسيو، ميرسي بوكو عايشك.
لا
ثانك يو.
Bye. Let's finish with this application. Then we'll take a break about 5 minutes. 5 minutes هكا and we have to finish على القليله حتى ال MPV نتاعنا باش نجموا تخدموا التوتال نتاعنا. Consider this proposed project. هذا السمري نتاع اللي كنا نحكيو فيه. We have a proposed project. Depreciable cost عندك $200,000 equipment, shipping 10,000, installation 30,000. The three هذو مع بعضهم هما the amount to be depreciated. When we use this project, we will have a change in our working capital. The inventories باش يزيدوا ب $25,000. Accounts payable will rise by $5,000. The effect on the operations, the sales will increase by $100,000, 100,000 units per year, with sale price $2 per unit. Variable costs هم 60% من sales. Life of the project for year. Depreciable life هما we will apply the modified accelerated cost recovery system or a 3-year basis. And the salvage value $25,000. Tax rate 40%. First question, compute the initial outlay. As I explained before, the initial outlay is composed by any cost linked to this investment project, اللي هو the equipment cost, the installation and shipping costs, and any variation in the net working capital linked to this project. We subtract any net salvage value in the case of a replacement. هوني ما عنديش replacement، ما قاليش فما replacement. So we will simply focus on the total cost of the equipment اللي هو cost of the equipment on itself plus installation and shipping tail plus the variation of the net working capital. The net working capital قال لنا فيه، قال لنا the inventory will increase ب 25,000. But at the same time the payables generated هما 5,000. Donc من جهة the accounts receivable will increase by 25. The inventory will increase by 25 and the payables will increase by 5,000. Donc ايش تلقى عندك inventory plus receivables minus payables will vary by 20,000. These 20,000 represent for the company an additional investment. An investment in what? An investment in the net working capital. Variation in the net working capital 20,000 plus 40 plus 200. Total investment flow, however, $260,000. It's a negative cash flow to say it's an investment. Question 2. What is the depreciation for each year using the modified accelerated cost recovery system. You have the basis اللي هي 200 equipment cost plus installation and shipping times the rates. You'll get the depreciation or the annual depreciation. What is the operating cash flow linked to this project? Of course, we have to compute the revenues نتاعي for each year. قال لنا 100,000 times $2 نلقاو revenues نتاعنا. 60% of the revenues هم operating costs. Depreciation computed here must be subtracted. You get the operating income, earnings before interest and taxes. You subtract 40% as taxes, you get the after-tax operating income. To this after-tax operating income, you have to add back the depreciation to get the after-tax operating cash flow. But during the last year, you have to add the after-tax non-operating cash flow اللي هما شنو اللي هما net salvage value and the recovery of the working capital requirement invested at the date zero. عندك sell price 25 of the old machine minus sell price minus the book value اللي هي zero خاطر equipment is fully depreciated times the tax rate تلقى 15 plus هاد 20 هذوما اللي حسبناهم بكري الريكفري نتاعهم مع بعضهم يعطينا $35,000 after tax non-operating cash flow. الافتر تاكس non-operating cash flow هذايا نزيدوه للoperating cash flow نتاعنا اللي هو 38 plus 17 تلقى 19 تاع العام الاخراني 62 year 3 91 year 2 79.6 for the year 1. Should financing effects be included in the cash flows? Of course, no. The financing effects اللي هو minus interest charges, for example. Adokum must not be taken into consideration here. We will take them into consideration later في الفيز 3 اللي باش نعملوها تويك اللي هي when we compute the profitability of the project. Of course, we will compare the different cash flows with the initial investment to say whether what this project will generate exceeds or no what the project requires of us cash flow. Only we have to compare cash flow 0 مع cash flow 1, 2, 3, 4. Of course, to be able to compare amounts that occur at different dates, we need to discount the future cash flows. When you discount the future cash flows, you use a discount rate. This interest rate, this discount rate used, هو interest charges, هو dividend paid by the company to the shareholders of the company. هما financing costs, هو the cost of the money used by the company to finance the new projects. Donc ما يجيش منه we subtract interest هوني وبعد الكاش فلو نزيد نقسمه على انترست ريت واحد اخر. ده كانك عملنا الدبل كاونتنج هوني. دونك to avoid the double counting ما نحيش الانترست charges. We avoid subtracting the interest charges with the financing costs when we calculate the cash flows. We will do it later when we discount the cash flows at a discount rate ونسميوها the weighted average cost of capital. نرجعوا له مرة أخرى. هو اسم weighted average cost of capital اللي هو the discount rate simply. Okay. Question 5. If the facility could be leased out for $25,000 per year, would this affect the analysis? Of course, yes. هذا يسميها an opportunity cost. إذا كان أنت الإكويبمنت هذا اللي عندك كنت تنجم تكريه لواحد آخر يدخلك 25,000 annually. had $25,000 if we subtract from them tax على هالrevenue هذايا اللي هو 15,000 تلقى عندك an opportunity cost that you have to subtract from each cash flow. It's an opportunity cost as we explained in the previous session. If the new product line were to decrease the sales of the firm's other line, would this affect the analysis? Yes, of course, we call this the cannibalization. It's a negative externality when you introduce a new project and the sales linked to this new project reduce the sales of linked to other projects already existing in your company. And there we have to take it into consideration. We call it an externality, a negative externality. If this were a replacement rather than a new project, would this analysis change? Of course, yes. If it were a replacement, this replacement will affect the initial outlay. In general, a replacement in general sales of the old equipment to be able to and replacement with a new equipment. That we need to subtract the net salvage value of the old equipment in the initial outlay calculation. And all the cash flows that we will estimate later will be variation of cash flows, variation of revenues, variation of operating costs, variation of depreciation, as we did in the previous example. What if there is an expected annual inflation of 5%? Of course, the inflation will increase the prices and the costs. So all the revenues will increase by 5% annually. And since the costs from a percentage of revenues, also the costs will increase by 5% annually compared to the previous values computed. You multiply each revenue by 1 plus 5%, take into consideration this inflation of 5%, and you recompute your operating cash. This is how to estimate the different cash inflows and cash outflows in relation with a project. If you have questions, I'm here to answer you. Then we will move to the third part of the shot.